edition, chapter 17, problem 28. So problem 28, chapter 17, Hoyle 12th edition. It's a very interesting one because it does the capital leases, both the government-wide and the fund financial. And in the fund financial, one of the capital leases is an enterprise fund, which uses the accrual method, accrual basis, and the others in the general fund. So we're on page 802, number 28. On January 1st, a city entered into the following leases for equipment items. Each of the lease qualifies as a capital lease. Remember that means that there's either a transfer of ownership greater than or equal to, the lease life is greater than or equal to 75% of the useful life, or thirdly, the present value of the minimum lease payments is greater than or equal to 90% of the fair market value or cash price, and lastly, there could be a bargain purchase option. But they specifically tell us that there are no bargain purchase options. We don't know why it's a capital lease, but it is a capital lease. Each of the leases qualifies as capital. So initial payments are on December 31st, 2015. That's unusual, but that would be an ordinary annuity as opposed to an annuity due if it was January the 1st was the first payment. The interest rate of 12% is appropriate on both of them. So first they ask us to do the government-wide journal entries, which is accrual basis, and then they ask us to do the fund financial journal entries. So I'm going to do them side by side, but I'll do the government-wide first, and then we'll go and fill in the fund financial. So the journal entries for the government-wide, we can do both of the leases together for government-wide. And so debit to the present value in the governmental actually we'll just say, because they would have enterprise, anyway, is debit to capital assets, or assets under capital lease. They call it assets dash capital lease, 49,600. In fact, I'll change it to what they have. Assets under capital lease, and a credit to lease obligation, 49,600. This is just like we would do in for-profit accounting, and that was on 1/1/15. Well, on 12/31/15, we actually, I'm going to skip a little room because we're going to need two journal entries over there. On 12/31/15, we make our first payment. It's been a year, and so 49,600 times 12% equals 5,952 as the interest amount. So we're going to debit to interest expense. That's the interest portion of the payments, 5,952. This is on both. And then debit to lease obligation, which is this amount right here. For the rest of it, it says that, I'm skipping a line, it says that we are paying, for the two of them, $12,000 a year for these first years. So 12,000 minus 5,952 is 6,048. And that would be just like you would have in for-profit accounting. Also, we want to depreciate both of those capital assets under capital leases, and the book does it separately, so I will do it separately as well. Just like you would do in for-profit accounting, debit depreciation expense, credit accumulated appreciation. But in the governmental, you would do that $19,000 is the present value of this. 19,000 was for governmental activities, and the other 30,600 was for business type, because it was an enterprise fund. And so the 19,000 is a 10-year life, so 19,000 divided by 10, but the 30,600 is a 4-year life, so another side computation, 30,600 divided by 4 is equal to the $7,650 annual depreciation expense, 7650, and this would be in business type and credit to accumulated depreciation. Okay, so those would be, these are all at the end of the first year. What do we do for fund financial? Well, on 1/1/15, we actually have in the enterprise fund, we account for this. We don't do anything for this 19, the 19 was the general fund. But what we do want to account for is in the enterprise fund, we're going to do the same journal entry that we did here, but it's only for the 30,600, which is the enterprise fund. So debit to assets under capital lease, 30,600, and a credit to lease obligation, 30,600. That would be our capital lease obligation. We don't have to account for the 19,000 in the general fund. They don't have long-term assets or long-term liabilities. On 12/31/15, we do have general fund. The general fund is going to do debit to expenditure for $19,000. That is the asset. That is the payment. Present value total payments. Debit expenditure and credit other financing sources. Capital lease, 19,000. Also, the general fund is going to account for their first payment on that 19,000. Tells us that the payment there is it says $3,000. So we're also going to do an expenditure interest. The interest would be the 19,000 times 12%, which is 2280. So 2280. The credit to cash is the full 3,000, and so the other is the expenditure principal or capital lease obligation, 720, and that would be the general fund to show we've expended it, we have a capital lease, and also now we're making the payment. It's very different for the enterprise fund because they are accrual basis. This is our governmental activities or governmental fund modified accrual, but the same kind of thing, the same transaction on the enterprise is totally different. We did the January 1st, but on 12/31, we want to do the same thing that we did here on 12/31/15, debit interest expense, debit lease obligation, and credit cash, and their annual payment was $9,000. So a piece of this 12,000, here's the credit to cash of 3,000, credit to cash of 9,000 is the equivalent to that cash of 12,000. The interest expense here would be the 30,600 times 12% is equal to 3,672. So here you have 3,672, and you also have 672 and 2,280. Okay, 5,952. That 3,672 is going to go right here. The 2,280 was just an expenditure on interest. And then 9,000 minus 3672 is the amount of principal, which is 5328. Also, we don't have any depreciation here, but this same type of depreciation that we had here. So we have a depreciation expense. This is the same journal entry. Debit depreciation expense, credit accumulated depreciation, 7650. Accumulated depreciation, 7650. So in summary, this is accounting full accrual basis for both leases. Debit asset, credit obligation. Debit interest expense, lease obligation, credit cash at the end of the year. Depreciate both assets. However, this particular asset, the 1900, and part of this are in the general fund, and they do not account for long-term assets and long-term liabilities. So only for the fund financial in the enterprise fund, that particular lease is capitalized. In the general fund, we just account for the fact that we do have an expenditure, that we do have an asset. We also expended our interest and principal and paid the cash. And there is nothing like this journal entry, because we don't depreciate in the general fund, but this one is exactly the same. And that is Chapter 17, Problem 28.